This is my cheat sheet. It's on my website. I'm going to change this video, but I wanted to show you something that I've incorporated into here that I think it's a light bulb to tell you I need to know more about this stock. And it's an employee account. So what I have learned through this training I've gotten through Goldman Sachs is the first things you do when you find a growth opportunity, a means by which to grow your business, is you have to gear up for it. And you go in two directions. One, you borrow money in order to finance the gearing up, and secondly, you hire people. So on my cheat sheet here, over in the far column, I have 5-year employee growth. And so what that's telling you is how much has the the workforce of Apple grown since 2020. It's grown by 12%. Okay, but then ACLS has grown by 61%. So which of these two companies would you say is potentially growing? Now, this isn't the only number that you would use to make an investment decision, but it lights a light bulb. What I was doing was I was doing some work, and I came across this one. This is GTLS. I just doubled down on my holdings on GTLS because of this. See that? Their workforce has grown by 124% since 2020. That tells me they have a growth opportunity and they're growing. Now, that's not the only number that I would act upon, but it gives me an insight to say I need to look further. Let's look at some others that stand out. That's Navitas. This is a stock I've been pumping regularly, that this is a stock you need to look at. Let's look here and see if here's one, 213%. That's Snowflake. Snowflake has some other issues, but it is a red flag to say, let's look at it. This is Symbotics. Again, a company that is growing, and it's having to put on people in order to grow. And then this is Twist. I'm not too high on Twist, but that's for other reasons. What I'm telling you is, if you'll come to this part of my website, you can come down here, and these numbers will change as they change. I will update them accordingly. Now then, once you do that, the next place I want to recommend you go is to my 3-year price projections. Let me show you that. Okay, that's this sheet. You'll link to it through the cheat sheet, and what it does is I'm looking at each company based on its earnings per share growth, average earnings per share growth over the next 3 years, their PEG ratio, which is a fact telling me whether the price at its current price is overpriced or underpriced. Anything with a 1 or below says it's underpriced. Anything with a 1 or above is overpriced. So you can see my analysis is telling me that Apple is overpriced. Now let's go to GTLS, which I was highlighted as a right result. It's growing. Its revenues are growing at 22.7% average per year over the next 3 years. It's got a 1, so that tells me it's fairly priced. It has a PE ratio of 21.2, so that tells me that it's in line with its industry. And so then what I do is say, what is the current price? And if in fact GPLS grows, its price grows in coordination with its earnings growth, that's going to give me an 85% growth on over the next 3 years, 85% total. Now, you might ask, what is GTLS? Well, I've done that research for you, and I'm telling you, giving you here access to a podcast that I've put together that will give you exactly what GPL or GLS is.
At the forefront of clean energy, hydrogen, even space exploration. A company so well positioned that its future looks bright regardless of the political landscape. That's Chart Industries, and you want to know if their stock is a buy. We've got their latest earnings call, transcript press releases, and analyst reports ready to break down their growth potential and see if their current price is justified.
Yeah, it's a smart question to be asking. Chart Industries is operating in some really exciting spaces, and their recent performance definitely gives us a lot to unpack.
So let's start with the big news, their Q3 2024 earnings. They just announced record revenue, but there's a bit of a twist to the story.
Right, you're talking about that $1.06 billion revenue figure, a whopping.
Okay, so that gives you a direction to go. After you look at the cheat sheet, after you digest these numbers, then you go to my 3-year projection. It's going to be, you're going to find it up here, or you might find it down here. But I'm asking that it be moved up here, so it's an easy place for you to go, so that you can go through each of those individual stocks. Then those that you're interested in, you can go to the podcast and learn exactly what they're all about. My objective is to teach you how to invest. Number one, someday you will get to the point where you understand all this. What is the earnings per share growth, and how does that play into the future price of a stock? What is its return on asset ratio? What is its return on equity ratio? And how does its PE relate to that, as well as how does its PEG? This is a means by which I can share my knowledge with you, and you don't have to pay me based on assets under management. That's what a financial advisor will do. He'll charge you for a percentage of your assets under management, and he won't explain all this to you. He'll take your portfolio and give it to some asset manager and say, here, put him in category B and invest his investments accordingly. What I want to do is empower you to make good investment decisions, and that's what the website's all about. And you can come here and educate yourself and make good investment decisions. I don't charge you, as I said, for percentage of assets under management. It's $19.95 a month, and so that you can find out if it's right for you, we have a opportunity to have access to it for 14 days as a free trial. And if at the end of 14 days it doesn't work for you, that's understandable. You go do what you need to do, and we'll continue to grow this way. Okay, I just wanted you to be aware of, there are some companies that are growing phenomenally, and the first thing you should look at is what are they doing with their workforce? Is it growing at a means that would indicate they believe their business is going to grow? And if they believe, then dig deeper and find out if you believe. Okay, that was important, and I wanted to get it out to you as quick as I could.